Hello and welcome everybody to the video. This is our fourth eToro quarterly popular investor call. And I'm very excited to have a really great guest and a panel in which we're going to talk about all elements of the economy and talk about what happened a bit last year in 2021, and then talk about what we expect to happen in 2022. So we have a really great panel. So before we get started, I just want to say that the opinions expressed by those of the panel are their own opinions, and we're not employees of eToro. So to get the disclaimers out of the way, also don't forget to like this video and subscribe to the channel as well, so you can see lots of other quarterly investor calls in the future. So I'm going to start off by introducing the panel. So today, if I start off with Amar, would you be able to introduce yourself, please?
Yeah, sure. Thanks, Stephen. So I'm Amar Singh, 1234 on eToro. I've been a popular investor on eToro for about 2.5 years. I started on YouTube, actually. I started sharing my own personal portfolio on YouTube. Been investing for about 6 to 7 years right now.
Excellent. Thank you very much, Amar. And on to Zach. Would you be able to introduce yourself?
Yeah, sure. I'm Zech, 𝗂𝗶𝗃𝗀𝗃𝗃. I go by eToro Fund Manager Zech. I've been on eToro for over 6 years, trading for way longer than that.
Okay, thanks very much, Zach. And we're going to go on now to a special guest for this episode of the Quarterly Investor Forum, and we have Gasper Sopi. So will you be able to introduce yourself? And I'm a little bit disappointed, considering you're in the Dominican Republic, that you're not sipping a cocktail right now.
I think that would be a bit worrying, because it's about 6:12 a.m. for sipping cocktails, so it's either an after party or I would be an alcoholic, which I'm not. So, but anyway, Stephen and the rest of you guys, thank you for having me. It's really an honor to participate in this call with you, and I look forward to sharing knowledge and also gaining some knowledge and learning from you. So anyway, to introduce myself, I'm Gasper Sopi. I go by the same name on eToro. My career started sort of in tech and design, and I've been a tech entrepreneur up until 2016, when I decided to sort of double down on my investment skills. Been investing since 2011. Started off on European markets and then moved slowly to international markets. I've been with eToro since late 2017, and I've been a PI since the start of 2019.
Thanks very much, Gasper, and welcome to the group. And lastly, I'm going to go to Maverick. Could you please introduce yourself?
Hi, I'm Maverick Goh. I go by the name of Nathan Dimitri in eToro. And yeah, I started to invest since 2020 April, during the market crash. And yeah, that time was MCO lockdown, so I was at the home and the market crash. So I started to invest and interested in this financial market. Yeah.
Okay, thanks very much, Maverick, and welcome again. And just to introduce myself, my name's Stephen. My username on eToro is 𝗵𝗲𝗄𝗃. I'm a full-time investor, and I've been investing now for about 13 years. And I invest in lots of different asset classes, equities, also crypto, commodities, and ETFs and many other different asset classes. So yeah, that's a bit of an introduction of myself. So as we move on to the interesting meat of the subjects, let's start off with what happened in 2021, because we are now in a fresh new year in 2022 in January. And I thought really before we kickstart what's we think might happen in 2022, we can discuss some of the things the key stuff that happened in 2021 and how it went for your overall portfolios. So I think I'll start off with Zach. And I'm just going to ask you about some of the things that you think went well in 2021, and then just some of the things that you didn't go so well and didn't go to plan.
Yeah, thanks. So, I mean, looking back at 2021, definitely cryptos for me is the biggest contributor to all the returns that I have. But of course, you know, since the December last year, I think we've experienced a bit of a market correction, and by a bit I mean we are seeing blood everywhere, right? So cryptos are down like 30-40%. Stocks are down as well. So the end of December was towards the end of the year was interesting. Before that, I think we were having a pretty good bull run. Yeah, and I think we'll discuss more about where we're going after this. But yeah, I think it was interesting to see, especially last year, looking at the markets, that everything fell at the same time. We didn't have a single asset class that did well in like December, maybe for US dollar, but other than that, bonds came down, gold came down, commodities are down. And yeah, so we are trying to see which is going to recover first. It looks like tech is going to take a while to recover, but everything else looks pretty good in 2022.
Okay. So did you have any areas at all, Zach, in your portfolio that didn't do as well as you expected in 2021?
Yeah, I think I mentioned this the last time during our investor call. Home builders is definitely one of them. I thought that home builders outside of these central cities would do well, but didn't kind of play out. So I kind of closed that position. Luckily, I managed to get out with like barely break even. But it took a bit of time, and then, you know, a bit of opportunity cost there. But I think it's part of the game that we play. Yes. I think it faced a lot of supply shocks from supply chains everywhere. So that's definitely part of it.
Yeah, we definitely can't get them all right.
Yeah.
Okay, thanks very much, Zach. And on to you, Amar. Is there any areas in 2021 that you did particularly well for you, and some areas which were a bit more difficult?
I'll tell you what didn't do well for me in 2021, almost everything. I think especially Chinese stocks. I was very surprised by how much Chinese stocks fell in 2021. At the start of 2021, I thought Alibaba looked undervalued, but at the end of 2021, it fell, I think, another 40 or 50%. So I was quite surprised by that. I was also quite surprised, I think, especially in November and December, we had quite a big sell-off in growth stocks. Some of the winners from 2020 didn't do so well in 2021. Like for me, it was a telehealth player in the US called Teladoc. So it didn't do very well for me. Some of the stocks that I didn't expect to do very well did well, like S&P Global or Intel. So it can be quite hard to predict what will do well and what won't in a short time frame of a year, I think. But over the long term, I'm still confident of the stocks I have in my portfolio. I see crypto maturing a bit more this year. I'm not sure if it's still a undervalued buy at the moment, but I think it's going to become more mainstream, and so that might be an exciting space to look at also.
Okay, thanks very much, Amar. And I'll go on to Gasper. Any exciting areas last year in 2021, or any others which weren't as spectacular?
Well, I think when I think of 2021, there was abundance of excitement, and I think that was kind of an issue there. In a way, I see last year to have been a sort of like an information processing year, and the markets were quite erratic. So I had a feeling that, you know, with all the information coming on all the time, you know, vaccine rollouts, fears of inflation, Chinese crackdown, there was no shortage of, you know, big headlines. And so I was, in the beginning, I was struggling to figure out where the market is going, and also I find it very challenging to match my usual sort of approach to investing, which is radical buy and hold. That has so far, been the biggest contributor of my performance, with the actual challenge of, having received a lot of copiers and then sort of a little bit of risk adversity kicking in and trying to figure out how should I navigate all that AUM that was substantial. And so I began to I began to rely more on market timing strategies, which is something that I don't do. And it was going really well while I transitioned, for example, I was in the first part of 2021, I was overweight on value stocks, on finance, on energy, and that was well. But then I began to transition back to growth stocks in hopes of, positioning for the future. And then actually that kind of chipped away from my performance. So it was a bit of also tapping a little bit in the dark for me and trying to figure out where the market is heading. But I think the lesson that I sort of extracted from this one is just basically, if I have a strategy, it's best to stick to it. I think 2021 proved that, investing in products and companies that people love and that have predictable cash flows and they actually have revenues and earnings, people who did that actually fared well in the last year.
Yeah, I think it was very volatile, especially in the last couple of months of the year. Gasper, did you put any either any hedging strategies in place to try and minimize potential losses, or did you hold more cash or bonds? Is there any way that you particularly negated?
Yeah, I think my hedging strategy was to go overweight on some of the fundamentally undervalued, or at least in my estimate, I was holding at one point Berkshire Hathaway was like my largest position. But the way I approached it was partially as a hedge and partially as a sort of let's call it like a cash balance deposit, which I was expecting, to contain my cash, which then I would be reallocating later in the year to growth stocks. And again, going back to this idea of timing the markets, which to a certain extent worked well, but then the last part of the year really the portfolio took a hit. So we'll see what happens.
Okay, thanks very much, Gasper. On to you, Maverick. Any areas in 2021 you want to talk about which were good for your portfolio? Any tougher areas?
Okay, yeah, for the 2021 is I think the FANG in my portfolio did well because they have a strong cash flow and the strong earnings. It's a proven business. Yeah. For my portfolio, what didn't do well at the end of the year during the November, December is crypto and the growth stock. A lot of the growth stock like the 𝗁𝗁 Invest, those company, it's like it's give me a big drawdown. Yeah.
I think a lot of this was to do with the fears of the interest rates, which we'll talk about in a moment. But thanks very much, Maverick. And just to give you a little bit of a summary of my areas of ups and downs last year, I did very well at the beginning, the first half of 2021. So had some really bright areas. Crypto obviously did very well in the first part of 2021. I also had oil stocks began to progressively do a lot better throughout as the year progressed. Also did very well from oil stocks as well. And at the beginning of the year, I was a little bit more overweight in technology stocks for the first half of the year. But as they started to talk more about the increasing of interest rates, I rotated a lot into value stocks and also into pandemic sensitive stocks, which After that Delta variant, after the breakout, they did quite well for a period of time as well. So those were some of the bright spots from 2021. I guess my main negative area in 2021 was Chinese stocks, which didn't perform very well at all in my portfolio. And generally for me, the first half of 2021 was better than the second half of 2021, but I still think overall it was quite a good year. Yeah. So I also wanted to ask you as well, because obviously last year was a difficult year for popular investors, I think, as a whole, and not just popular investors, but fund managers as well around the world. Because I think what happened is those top, the most heavily weighted stocks in the indices did really well. So I think that's why we're seeing the NASDAQ and the S&P produce above average returns in 2021. And that wasn't always the case for other investors, for hedge funds. Has anyone got any ideas on why they thought that happened and whether they expect that trend to continue? Zach, anything from you?
Yeah, I think if we look at the numbers, it was like the top 5 stocks contributed 35% of the S&P 500.
Correct.
I mean, any dislocation, that's an obvious red flag. And I've been on this for a while. Like I believe tech stocks are a bit too, whatever's popular in the first 10 years will not be popular in the next 10 years.
Yeah.
And we've ridden this growth tech narrative as far as we can go. Not to say I still don't believe in things like software as a service. I think that took a huge hit and is very disruptive if you followed like the 𝗂𝗶𝗃 𝗏 idea. But in the interim, the big players are really gonna have some issues going forward. I think that's going to be really obvious. Yeah,
I think if we look at what happened, what the top stocks were in the S&P and the NASDAQ 10 years ago, yeah, very different to what they are now, and it's quite likely that 10 years in the future they're going to be very different as well, right?
Exactly. And I think all fund managers have to be exposed to, as people know, it's called shadow beta, which means you have to buy a certain portion of portfolio into S&P 500 so you don't underperform the market. And because of certain market mechanics, this creates that like differentiation. Yeah. That's my view. And when tech stocks fell, like everybody fell. It's just kind of the natural cause and effect of having such a market structure. Yeah. Because I think a lot of the outperformance was by Apple and Tesla at the beginning of the year, and there was a few other companies in there which caused the outperformance. And I think naturally, just as fund managers or popular investors, I think what we try to do is we try to outperform those indices, right? That's our MO. That's why people invest in us, because they want us to outperform those indices or take a lower risk, for example. And I think naturally, as you're trying to beat those indices, you have to do something different to those indices. So you're likely to go a little bit further outside of the risk curve in order to try and outperform those indices. So I think I think if some of the smaller companies underperform or certain markets, it can be more difficult to outperform those indices. But 2020 was a totally different year, where most fund managers actually outperform the indices. Yeah. Anyone else? Gasper, do you have any insights onto the indices and how fund managers, for example, tried to manage that?
Yeah, that's a very, very interesting question. I think 2 things come to mind, and basically they are one thing in total, but I think they sort of manifest in 2 different ways. I think what you said about the necessity of going out of the risk curve, I think that's one way to look at what was happening with the indexes. As we sort of progressed out of partially out of the pandemics and out of the core 2020 fears of pandemics, I think people were sort of in a state of very, let's say, anxiety and uncertainty. And I think in this sense, those the reptilian brain in people takes over, and we try to seek safety, and we go to our basic instincts. And what probably happened is sort of the market as a whole was trying to position itself in a way to protect all the gains that came from 2020 and all the sort of insurgence of meme stocks and all the bull runs on the cryptos, etc. And I think what in my part was a misestimation was that this affinity for risk is going to decrease. And generally, I am sort of I have a higher capacity for risk. So there was a mismatch between the way I see the world and the way I guess the market saw the world. And I think another aspect of it is sort of I think there's been sort of an increase in passive investing globally, with also with the advent of retail investing opportunities, and with the sort of plethora of apps that people can invest. People have started to invest in indexes and try to different funds, and then I think this is kind of buoying the what Zheng mentioned, the top 5 biggest companies which are carrying the indexes. So I think all the capital flow is kind of going into that direction.
Yes,
that's how I see it. Yeah.
Yes, I agree with that. I agree with that. Thanks very much, Gasper. Amar, I'm going to ask you a different question. How did you see the evolution of COVID-19 last year and the way that it potentially affected the market?
Well, I'm not expert in COVID-19, but I think it caught many of us by surprise, especially the new variants. I think Delta middle of last year, I think that caught a lot of people by surprise. And then Omicron, right? I think towards the later part of the year. I don't know. I think eventually, what they say is COVID is going to become endemic. So it's just going to be like the common flu. I think Omicron is already signaling that it's not a very severe illness. So I think for the most part, we are over the worst of COVID. I think we should look towards a future free of COVID. I'm just worried about politicians. I think they become too paranoid about COVID, and they make rash decisions sometimes, like with the lockdowns or with vaccine mandates. I'm very opposed to vaccine mandates. I don't think we should force people to take the vaccine or anything actually. So I'll be interested to see how that turns out for the rest of this year.
But I don't know about you guys, but I was actually quite impressed how quickly the world actually rolled out the vaccines. I know it's uneven in different countries around the world, but they actually managed to prepare them very quickly and roll them out around the world, which was quicker than I expected. I mean, I remember at the beginning of the year, a lot of people were saying, well, they weren't going to roll out the vaccines until kind of later in 2021. And it was actually pretty well rolled out by kind of that May to kind of the summertime. So I think it went quite quickly, I think. But it did have some impacts on the stock market. Did anyone try to play the wave of the reopening of the economy? I know that that was a setback again towards the end of the year with Omicron, but did anyone try to play those reopening of the economy and some of those COVID sensitive stocks throughout the year?
I think just you, Stephen.
Just me? Am I the only one? I'm the only one who tries to dabble in these trends.
I was trying to do.
Well connected, you know? Sorry, Gasper, go for it.
No, please.
No, I was just saying Stephen's probably the only one with the insight into the market that's able to do that. I dare not touch this kind of thing, man.
Yeah. So yeah, I did. I did in a way. So I think it was around August, September time. I got into a lot of different stocks, like COVID sensitive stocks, like theme parks and some other areas which were and Airbnb and some other companies which were involved in travel. I did manage to get out of them in profit just as Omicron set in, and there was a panic of Omicron. And I realized that it was going to be very infectious and that it was going to spread around the world. I actually thought it was going to cause more lockdowns than it did. But yeah, I did manage to get out of them in time, but it's historically very hard to time. Historically very hard to time. Okay, all right. So I think that's the main parts about 2021. And now I want to talk about some other areas and some future risks. So these are some things that we might think could be a risk to the stock market in 2022. And I think I'm going to go with the very obvious subjects. So I think the first subject that's on everybody's mind at the moment is inflation, and whether the money in your bank is actually worth anything or whether it's just a bunch of melting ice cubes and numbers. So I'll go over to Maverick. Do you have any views on inflation and whether you think we might have reached peak inflation or whether you think it's going to go much deeper than it currently is at the moment?
Yeah, okay. For this inflation, I think, yeah, it's now at historical high, 40 years historical high. And the official number that are reported is, I think in the realistic world, is higher than that. Higher than the 7%.
Yes.
Yeah. So yeah, I think everybody should invest to get their to prevent their money from losing value.
Purchasing power, yeah.
Yeah.
Stop melting.
I think everybody should invest, and yeah, in either the stock market or the crypto or whatever. Yeah.
Other areas, yeah. Yeah, I think that's a very valid question, is how much can we trust those numbers, those inflation numbers that are released by the Fed? And I guess the answer is you can't really trust them too much, because they're probably very valid if you don't need to drive, if you don't need energy, if you don't need water, if you don't need all those necessity things that you need in everyday life. So yeah, record numbers obviously released in December. So yeah, what about you, Zach? Do you have any thoughts on inflation and where you think it might go? Do you think we've peaked out? Do you think it's going to get worse? What's your views?
I think this is a question for the panel as well. Like, I don't know how to answer this, and I was actually not sure about you guys. I was looking at buying a TIP ETF, which is the inflation-linked notes, right? The bond ETF.
Yeah. And
if you look at the TIPs, like right now, right, they are not going all-time highs. They are not. They're just kind of trending downwards. In fact, the price of the TIP bond ETF. So if that's the case, then is it true that the market's not pricing in inflation? I don't know. What do you guys think? Gasper, maybe, Stephen?
I think it's pricing in inflation as it is. I think they're pricing inflation that it's almost peaked. I think if inflation increases beyond that point that we saw in December, then I think the market will reprice it. Everything will be repriced. I personally don't believe that we've hit peak inflation yet. I don't think it's going to get insane. Well, you could call the numbers already insane, but I don't think it's they're going, like, there's a lot of conspiracy theories and lots of people talking about hyperinflation and all those things that I just don't think is possible in the US economy, especially in the near and medium term future. But I think it could get worse. And luckily the Fed are quite flexible in terms of the interest rate hikes and the tapering of the bond purchases. So there are certain ways that they can play it out, but it is starting to get a bit insane. If we look at the inflation figures, and if we look at stuff like energy and secondhand cars, for example, do you know, I saw a figure yesterday that secondhand cars went up 40% last year in the US. 40%. So if you had a secondhand car in the US at the beginning of the year, it's now worth 40% more than it was at the start of the year. Can you believe that? Like, it's absolutely unbelievable.
No depreciation there, man.
I don't think anyone predicted that beforehand. Yeah.
Yeah, but even
yes,
more
people were.
Sorry, go for it, Gasper.
I guess people were sort of, going for cheaper cars and putting the rest of the money in the stock markets and crypto.
Yes, I think so. I think that might have been the case.
They were downsizing, selling their Teslas and buying,
crypto.
second-hand cars. Back to you, Zheng.
No, I was just gonna say, it's interesting because if you look at the bond market as well, the 𝗬hy, the 𝗍𝗓𝗃, they're all coming down. So those are all treasury linked. So the 7 and 10 and then 1 and 3. So those are all going down. So that means inflation in theory is being priced into the bond market, but the tips are also going down, which means I think Stephen is right. The market hasn't made up its mind and hasn't priced it in. I think that's the best explanation we got for this kind of market dynamic.
Yeah. And I think the market's, in my opinion, I think the market's right now is pricing in 3 Fed rate hikes in 2022. I think if it becomes 4 Fed rate hikes in 2022, I think that the market may reprice itself as well. But I think that's what's expected at the moment. And I think the expectations in the market is that we are potentially close to peaking on inflation. But there's a huge amount of factors. I think the Fed have changed their narrative throughout the year. It started off with there wasn't really a problem with inflation, and then it was this is all transitory and that it will change, and then this is a problem that we have to live with and we have to deal with, and then now this is a serious problem and we need to deal with it before it gets out of control. So that's the whole roller coaster throughout the whole year, and that's where we're sitting at the moment. Yeah. Gasper, do you have any views on either the interest rate hikes for 2022 and whether you think it will help reduce inflation, and any general views on inflation or interest rate hikes? Yeah,
again, a deep topic, and I must disclaim that it's not really my forte. Like, I'm not a macroeconomist. The fundamental investor in me is saying, like, who cares? Just invest in good companies, and stay invested for the long run. And I mean, the market is going to do what the market is going to do. But if you have a long-term horizon and you are invested in companies that create products and services that people love, good brands, good cash flows, predictable, sometimes unpredictable revenues, etc. in case of growing companies, disruptive companies. So I think, depending on the investment horizon one takes, the worries or the outlook on the inflation kind of has more or less relevance. And I personally find this, going forward to be a challenge for me in the way that I manage my portfolio on eToro, because obviously copiers and the eToro community kind of has this expectation of delivering positive returns every year, which kind of puts pressures on all of us to perform. So we must sort of sometimes narrow down our perspectives and try to engage in these kind of market timing strategies and trying to figure out how the macro is going to influence the market dynamics, which is really cool. And for people who can do it, obviously you guys have been at least successful in that sense. I know that Zheng and you, Stephen, have done well with these kind of strategies. I have struggled somehow, so I kind of faced the challenge of figuring out, whether to stick to a long-term strategy or try to figure out how these hikes are going to sort of have an impact on the markets. That said, I think historically, from what I've read, whenever central banks have tried to size down on their monetary policies, this hasn't been particularly successful. So, I kind of have a contrarian opinion on this. I think the easing is going to continue. I think inflation is probably going to persist, but not across the board. I think, you know, it's important to look at what is the makeup of the of this inflationary forces, you know. So it's not the same whether the energy is pulling the inflation numbers, or whether it's food, or whether it's, so the inflationary basket is kind of not it's quite diverse. And so I think that perhaps we might see some inflationary forces in areas which have been affected by supply bottlenecks. But I think that some of the other things are going to harmonize over time. And yeah, I mean, inflation is in the short term, yes, it's going to have a material effect. But I think in long term, this is something that an economy over 10 years can overcome.
Yeah. Okay. Thanks, Gasper. And I understand from your portfolio, you're quite heavy in tech stocks, right? Am I right in that thinking?
Yes, exactly.
Are you worried about the interest rate hikes and the effect it might have on tech stocks?
Yeah, I think, well, my portfolio is kind of like presently at 50-50. So 50 growth stocks and 50 sort of more, let's say, conservative positions. I think a lot of the heat has already been taken out of the growth stocks, and I think they've been discounted on the account of future rates. So basically, I'm not saying that you know, they're bottom, because we have this problem of indexes having continued to surge. So if sort of NASDAQ starts to sort of substantially draw down, then I think this is going to also put some pressure on already beaten down stocks. So we might see some further pain there. But you know, for someone who is thinking about whether to invest now or not, I think in terms of growth stocks, it could be a potentially good time to start sort of easing into these opportunities.
Yes, they definitely have drawn down a lot since November.
Yeah.
So they are starting to come down on price. It's very hard to tell, though, really, on growth stocks at the moment whether they are cheaper, because obviously they're cheaper than what they were at the kind of midway point of 2021. But obviously you had that huge spike in 2020 after the pandemic, where the growth stocks went up really high to kind of all-time highs, and they have drawn down a lot, but some of them are still above, obviously, pre-pandemic prices. So it can be a bit difficult to tell whether they've topped out yet or not.
Yeah, I agree with that. Absolutely, yes.
Yeah. Okay, thanks, Gasper. And Amar, I wanted to talk to you a little bit about supply chain bottlenecks. Obviously, we had quite a lot of supply chain bottlenecks. I think that was one of the key issues in 2021, which may have caused, well, I think the Fed liked to say that caused inflation, but I think it was probably more to do with them just printing money so much in 2020 and 2021. But supply chain bottlenecks were definitely an issue that was faced. Do you think that those supply chain bottlenecks might start to ease?
What I'll do is I'll share a view that I saw on 𝗁𝗲 𝗣𝗏𝗧𝗏's YouTube page. Sure. So basically, she feels that you know, during the pandemic, there was a surge in consumption of goods and services were less consumed. So this surge of led to the shortage, and we saw the shortage not just in daily necessities, but eventually in the chips shortage as well. It became quite dire. So what 𝗁𝗲 𝗏𝗏𝗧𝗏 is pointing out is that China is slowing down quite a bit. So I think she was saying steel prices have fallen quite a bit. She feels oil prices will drop further as electric cars become more mainstream as well. So we might see some reduction in prices for other commodities like copper as well if China materially slows down. So if China does slow down, that will be a welcome relief for supply chain bottlenecks. I think if if the demand is too high, then just reduce that demand a little, and maybe that will improve the situation a little. Yeah,
I think China as well, they've put in a lot of things because they had the energy shortage towards the end of 2021, and they also had very high commodity costs, steel and some other things that they need for their manufacturing industry. And I think the Chinese government actually put some things in place to try and make sure that the prices, try to regulate the prices, make sure that the prices don't go too high and there's price gouging, etc. I think that was another point of 2021 as well. I think there was a bit of a lag between obviously the prices going up, the manufacturing costs going up around the world for goods and services, and also wage costs went up a lot in 2021 as well, which I think it does take time to pass on those costs to the customers. So I think that may have affected some companies' bottom lines in 2021. Yeah. Zach, I wanted to ask you a question because you mentioned that you wanted to talk about Omicron. Is there an area of Omicron that you wanted to discuss?
Oh, I mean, you guys know Amar just explained it just now. The two outcomes that we can see in the market, right? One is we have a market reaction because we're going to get a lot of lockdowns. We're going to get a lot of cases. I think everybody knows this is happening. The Omicron is more contagious than the measles, making it one of the most contagious things ever. And this is according to what I read. Again, not a virologist, cannot verify any of this, but according to what I read. So if it is going to be so tragic and it's going to be everywhere, everyone's going to get it. Either the market's going to overreact and say this is a sell-off where we're going to get another 2020, another 2020 and the whole market drops, or we take the opposite view, which is the whole market just takes the optimistic views and continues to go up. These are the two possibilities. We don't know which is going to happen. How are you guys positioning yourself for it?
To be honest, I have a positive outlook, and this is perhaps sometimes, I have to watch this because it can be a bias in my, decision-making process. I tend to, to look at the world in positive terms, and often I position my portfolio in that light. So when it comes to Omicron, again, we're joining the disclaimer that I'm not a virologist, but from my experience, and I mean personal experience, I've been exposed to the virus, to Omicron, and I didn't catch it. I was basically in a household where a person had it, and I might have been asymptomatic, but I haven't contracted it. So this kind of points, at least in my personal experience, that it might not be as dangerous in terms of causing the sickness, the illness, as there are some fears. So it does look to me as the market is processing this in that way, and that I'm not saying we are going out of the pandemics or that we're out in the clear, but I don't think that enforcing stricter sort of lockdowns or measures is going to be in the playbook of policymakers going forward. And this to me kind of points out to that we might finally start to see some things normalizing and the economy starting to sort of balance out these bottleneck issues and the supply and the demand starting to harmonize. We'll see how it goes. I mean, it's anything can happen. The virus is unpredictable, so
it is very unpredictable. But I think the good thing is, obviously, the cases are record number of COVID cases around the world, US, UK, many countries, and I think that's very important. But I think what governments are actually coming round to realize is that hospitalizations and fatality rates are the most important, and the main thing was about not having this burden on the hospitals. But those fatality rates and hospitalizations are, I would say, they're fairly under control in most parts of the world, and Omicron is not as serious in terms of the effects of Omicron. than the Delta variant or other variants, for example. So again, I'm not a virologist, but from what I've read in reports, that as these types of coronaviruses or pandemics continue over a period of time, they tend to get more infectious but less severe as you build up more and more, as people build up more and more immunity to these types of pandemics. So I personally, again, you have to always look at the data to see how things are evolving, but I tend to be on the side of positioning that the COVID-19 is going to become more of an endemic, and it's going to become more widespread like the common cold, but less severe, which I think will allow our economies to be able to open up. But I'm not at the stage where I'm doing pandemic recovery plays at the moment. I don't think that the governments are going to lock down, because we've seen record number of cases. I think if you'd have asked me a month ago, I would have said it was quite likely that, especially in Europe, that they were going to lock down countries. Some countries did, like the Netherlands, but other countries just raised the alert levels. But it doesn't look like they're going to shut down the economies now. I think people are prepared to live with it. And I think that could be a good thing moving forward. And I think you get to every stage in this type of thing where the citizens of that countries, they have enough of it as well. And I think that the governments are very aware that, one, economically people will be suffering, and also people psychologically will have come to the end of the tether.
So you guys holding airline stocks? You think it's a good idea?
I was just going to say, maybe, you know, if somebody would want to look into airlines, I think it makes sense to go for airlines that are sort of where their revenue makeup is made out of the domestic flights. For example, I'm thinking Chinese or, you know, Asian airlines, as opposed to those that rely on international travel. You could probably find some gems in the industry, but I don't think as a whole, like I wouldn't be exposed to an airlines ETF or something, except if I wanted to keep it for 10 years, you know, in which case, yeah, it would be probably a good buy.
But it's notoriously a difficult
exactly.
to invest in anyway. And if you add this onto this, I'd be more inclined to, not right now, but I think as the pandemic opens up, I'd be more inclined to look at stocks like Airbnb or kind of travel related stocks, but not airlines, which I especially think Airbnb, because it has that opening effect of, after COVID-19, a lot more people are going to travel, but it also has that bubble as well, because people won't want to stay at hotels, for example, around lots of people. So you can, you know, hire a house and live in a house with your family, still have a holiday, but not be exposed with lots of people. So those are the types of plays that I'd be looking at, but I personally think it's a little bit early.
Or any value plays for this?
I'll still go with my payment stocks. I like MasterCard and Visa. I think they suffered a lot during the pandemic. So maybe if travel increases, there'll be more cross-border payments. So I'll still stick with MasterCard and Visa. I think they still have a good future long term.
I took a few plays as well in terms of frozen food companies, and also things that are necessity, things that happen when people aren't going out as much. So I did this during Omicron. So I had Stanley Black & Decker, you know, the people that do the drills.
Yeah.
They usually do really well during periods where people are indoors more, and they, you know, people have more time to do DIY around the house. Also, frozen foods tend to do pretty well during these periods as well of Omicron, because people eat out at restaurants less, buy more frozen foods for the household. So that brings us on to a really good point. So I want to talk about now key sectors in 2022, which our panel think will do quite well in 2022. So Maverick, is there any areas that you think will do particularly well in 2022? And let us know some of the tailwinds behind that.
No particular opinion, but I think the electric vehicle, yeah, will be doing good, and the crypto will also doing good. Yeah, other than that, I have no other.
Okay, so you think that electric cars, this will finally be the year where people are driving around in Teslas and phasing out oil guzzling cars? Is that your opinion?
Yeah.
Do you have Tesla in your portfolio?
Yes, I have.
Okay. Okay, so you think Tesla might do well in 2022 then?
Yeah.
Okay, excellent. Gasper, do you have any key sectors which you think will do well in 2022? Obviously, not financial advice. No one has a crystal ball. But
yeah, exactly. Yeah. Well, I certainly have wishes.
Yeah, give us your wish list.
Yeah. I'd be surprised if Chinese stocks didn't rebound materially. So, I'd be surprised if the fears and the pressures that we've experienced in the past years sort of persist. I think at least I'd love this to be to become true. To see some friendly voices from the Chinese government in that sense. So I'm kind of positioning for that. And like I said, the growth stocks, again, speaking in broad terms, are probably beaten down, and we might see some pressure down there. But I'm hoping that they will at least regain some of the losses, at least those that don't rely on external financing to finance their growth. So growth stocks that have sufficient cash flows and generate sufficient cash to be able to finance their operations, etc. So I'm thinking that, and not sure about crypto. I think large and mega caps are probably going to trade flat, at least for a period of time, while the market tries to figure out what the Fed is going to really do with the rate hikes. And so I think the first half of the year is going to be, again, information processing, and then we might see some volatility in the second half.
Yeah. Thanks, Gasper. And as you're a tech man by background, do you see any really interesting trends in tech that you think might be good in 2022? Like, obviously, they've been talking a lot about the metaverse, virtual reality, other areas. Yeah. Is there any other areas which you think might be not even talking about in terms of stock prices, just in terms of trends of tech in 2022?
Yeah, I like health. I like the sort of conflation of health and tech, and I see that to be sort of going forward, especially in the light of pandemics, as an area which might really pick up. The metaverse, there are different opinions on this one. I'm not completely bought with this idea. I do see how it can work in certain areas. I do think that it can sort of bring people together in terms of work, etc. But not to go too deeply into it, there are some issues with it, and I wouldn't necessarily say that anything related to metaverse or these kind of technologies are going to materialize in 2022. Yeah. But going forward, it's probably going to be very interesting for the rippled effects that it can have on other things.
Yeah, I agree with you. I think people tend to get very excited by some of these concepts, and I think it was Bill Gates who said humans tend to overestimate what's going to happen in the next year and underestimate what's going to happen in the next 10 years.
10 years, yeah.
So I think the metaverse might be one of those things, because Mark Zuckerberg and Facebook want to talk about the metaverse. Doesn't necessarily mean we're going to be having this quarterly meeting next time on virtual reality.
Exactly. Yeah. Just to add, like, I think chips. Sorry,
I have an interesting stat. All of us are invested in China.
Yeah, are we? Okay. Interesting. It shows we're all eternal optimists.
Either that or we live in Asia, so there's a bias there. One of those, yeah.
It might be.
Except Gasper.
It might be that.
Well, I do have some Asian characters, so.
Good. Cool. Amar, any thing in 2022, any tailwinds or any sectors that you're particularly excited about for 2022?
I think I'll echo what Maverick and Gasper have said. I think in terms of electric cars, I see them going, maybe even exponentially. We've already seen how Tesla has been delivering, a record number of cars. So as more of the bigger auto players get into electric cars, I think, electric car sales will maybe skyrocket even. But that's not to say that I invest in electric car stocks. I find it hard to pick the winner. I'm not sure which company, including Tesla, will be the ultimate winner in the electric car space. So generally, I avoid that space. But some of the companies I own do play in that space, like Amazon or Google, with the driverless tech that it's trying to develop. In terms of other growth sectors, I think I'll copy what Cathie Wood has said. I think genomics will, has a lot of potential. I think a lot of illnesses can be cured through, genomic treatments. So I think that has a lot of potential. And then some of the old usual suspects, I think the ones that I'm investing in all these years, like cloud computing, digital payments, e-commerce, I think they will continue to grow as well.
Okay. All right. Thanks very much, Amar. And I think the electric car subject is very pertinent as well, because obviously I think there's going to be more and more adoption of electric cars as time passes on. But I also do think it's not going to be as rapid as some people think. I think it's quite likely to take quite a number of years for the majority of people on the road to be using electric cars. And I saw in one of your recent, I think, investor calls, Zach. I listened to a little bit of it, and you were mentioning about oil and gas as well, and that I think you mentioned that. I'm going to put you on the spot here, mate.
Oh no!
And the reason why I mention this actually is because I agree with you. Is that I think a lot of people are thinking everything's going to shift over to renewable energies right now, and that oil and gas is not going to be worth a lot in the future. But I tend to I have the same view, and I have oil and gas stocks in my portfolio. And I personally think oil price is going up this year in 2022. And I think a lot of people are thinking that oil is worthless. But I think you shared my opinion in that video where you said that you were quite bullish on oil and gas companies moving forward. You still hold that view?
I'm not just holding the view, it's one of my biggest thesis of the year. I take Maverick's opposite view. Sorry, Maverick. I don't think electric cars are going to take off that soon. I don't know, just practically speaking, I never buy a new car, so I'm like, how long is it going to take for me to get electric? I don't know, man. It's
going to take years, I think, for people to need a new car, and then to switch over. But it doesn't. Obviously, they came from a lower market, so I think gradually over the years, the amount of electric cars on the road is going to increase, and eventually we'll hit that critical juncture. But I don't think it's going to be as quick as people think, and I still think there's I'm personally invested in renewable energies and oil at the same time, and I think a lot of people try to take the view one or another. You're either a renewable person or you're a oil and gas, and I don't think you personally don't need to take that approach unless you're have ethical reasons you don't want to invest in oil, for example. But I think definitely over the next couple of years, I think there's a space. I think there's a space for both, and I think no one's doubting the long-term effects that I think everything's going to be renewable energy in the future, but it doesn't happen overnight. I don't think.
Yeah, exactly. It shouldn't. I mean, we just don't need to take extreme views. I mean, I was looking at like a certain stock valuation. I shall not mention its name so we don't get in trouble.
Okay.
But it's like selling 1,000 cars a year is worth whatever P ratio of 100 or something. I'm like, oh my gosh, are you kidding me?
Yep, I know the one. We don't want to get sued, so we won't mention it.
Yeah.
But it begins with R. Okay.
Yeah. Okay. Stop there.
Zach, sorry, I gave you a question, but I want to know from you what sectors you think might do well in 2022 and how you're positioning.
Yeah, so oil is definitely the one that I'm most bullish on. I have quite a bit of oil, just because everybody's on the other side. I love my Russia stocks, man. I mean, I still have that. I mean, I was talking to you guys last time about it. I was holding on to it. I'm still holding on to it. I'm down like 20%. But now the PE ratio is like 7. I'm like, oh my gosh. And the dividend yield is like 6%. I'm like, this is insane. But of course, political pressures aside, I don't think Ukraine and Russia is going to get into any trouble. I personally don't think so. Just not all of your portfolio, maybe a bit. This is a great value play in my opinion. So I'm just going for that. I love crypto. I think you guys know I love crypto completely. I love DOT especially. I think it's the most developers going into like next year. It's more developers than Solana, just to get kind of perspective on that, which is insane. But yeah, I love DOT. So that's a good theme, but that's relative value. In terms of US stocks, I am actually considering getting out of most of it. That's just my opinion. I don't know what the US is going to do. I'm a bit shaky on that.
So you think it might have a tough year ahead, possibly?
Not just that. I think US has outperformed the rest of the world for many years, like many years, and it is a little bit too much on one side of the boat, right? So that's always what we say, like oil and electric, too much on one side of the boat. Too many people in US. That's just my opinion. Not much returns are going to be there in terms of real return. So I think we're going to go to the other side. And all of us are invested in China, so we're good. And all of us, I think, have 𝗶𝗶, right? Everybody has 𝗶𝗶, right? So,
I do.
Yeah, I love 𝗶𝗶 at these valuations. It's insane.
But Zach, I think your Russia and your oil and gas plays are quite interrelated as well, right? Because from what I understand about the Russia market is that the majority of stocks in those Russia indices, for example, are made up of what we call EMI, energy, mining and infrastructure stocks. So they're going to do very well, I think, if oil prices are high and commodity costs are high as well. But I think that they'll probably do quite well, but I do think there is some dangers around the Russia-Ukraine situation.
Exactly, there are.
Second from last, a very topic which I think is going to be really interesting for the viewers, and I wanted to talk a bit about crypto. And crypto had a great start to the year and performed really well at the beginning, the first kind of 4 or 5 months of 2021. Had a very sticky period in the middle of the year when China banned Bitcoin mining, and then had a nice recovery in November, followed by a big drawdown towards the end of the year. So if you can imagine that typical roller coaster like this, that was crypto in 2021. And so I think 2022, I think it's going to be a year which is going to be, I think it's going to divide a lot of people's opinion. I think as the economy is changing quite a lot, I think we had in 2021, we had obviously pretty much zero interest rates. There was a lot of stimulus being given to citizens around the world, a lot of people investing, no one wanting to put money in banks. So I think now we're in 2022. I think it could be a different year, but I just wanted to get some views of the panel. And I'm going to start off with Zach, because I know Zach's really into crypto. So what are your views in general overall in crypto and what's happening at the moment, and any areas that you're keeping an eye out for, or how do you think it's going to go, basically?
Okay, let's be 100% clear when I say any of this. I don't think crypto has any fundamental valuations. It's very, very difficult. Not to say it doesn't, but it's at most sticky. I remember I did my fundamental analysis for Ethereum is $800. And now it's like 4 times the price, so whatever. So it doesn't make sense. I don't like metaverse stuff. I don't like NFTs. I own one NFT from a long time ago, but that's it. I think that is a bubble, to be honest. That's my opinion. And if that goes, I wonder what will happen to the rest of the market. I was reading a very interesting stat as well. Like we keep talking about one side of the board, right? I think it was like 80% of millennials or Gen Zers believe crypto will help them become millionaires. I mean, too much on one side of the board, guys. It's like way off, right? Like, no, not everyone becoming a millionaire is called inflation. So we can't exactly do that.
If everyone's a millionaire, then a million's worth, $100 really in real purchasing terms.
Exactly. So we are very far on one side of the board, but it doesn't mean crypto has nowhere to go. Because if you look at the things that crypto is trying to disrupt, if you look at the a very, very simple example, if you look at banks, right, the derivatives market, like how large is that market compared to what crypto is? It's tiny, it's absolutely tiny. So we've got a long way to go to start building up all these. You look at FTX, they started wrapping some of the equity tokens, which is fascinating because now you can trade Tesla stock on the weekend, which is amazing. Which I don't know if anyone wants to do that because it's so stressful as well, but it's part of the market, right? So all these things are kind of changing and it's very exciting to see. I love seeing all these financial innovations. Not so much for the NFTs. Where do I see growth? I really love DOT. Like I'm a bleeding bull for DOT. I think if DOT will either make me a lot of money or I'll be bankrupt by then. It's two dilemmas of that.
Yeah, I like DOT. I like DOT as well, especially on the. I like the token economics of DOT and you being out and the parachain auctions and being and the DOT being locked up in these parachain auctions. Yeah, I think it's going to be a good growing ecosystem. Yeah.
And if you look at 2 and 3, by the way, for CoinMarketCap, like Ethereum and Binance Coin, there's a huge jump, right? So DOT is way down at number 20. There's potential for that to go relative value terms.
Yeah, I tend to agree with, again, I tend to just like the metaverse stuff in terms of NFTs. I don't think it's a complete, like a lot of people say there was money laundering and there is probably an element of that, and it has got overhyped, and people are putting all sorts of collections now. Anything that happens, you say, oh, let's make an NFT of it, right? Which I don't think is sustainable. So you're right, it's probably in a bubble, but I think as a key concept, I think that there's an industry there. And I think there will be certain NFTs or certain NFT collections, which will probably retain their value and increase over time. But I think it's very similar to the ICO phase of 2017, where now anyone thinks that they can have any NFT and the price of the NFT is going to go up just over time. And I think that a very high proportion of those NFT collections, etc., will fail, and the cream will just rise to the top. But I think there's an industry there. But again, I think people are getting a bit ahead of themselves and seeing that the world's going to change overnight, and it doesn't.
Yes.
Yeah.
Anyone else have any other opinions?
Gasper, do you have any opinions on crypto?
Yeah, well, we should probably NFT this talk and see how it goes in the future.
Who's paying for gas? Someone pay for gas. It's not me.
Yeah.
We can all chip in.
The gas will be more expensive than the NFT.
Oh, come on, we have to be more optimistic.
So, Gasper, any views on crypto?
Maybe just shortly, I'd say 2 things. When in doubt, follow the money. And then I would be reverting to Peter Lynch's idea that, there are many reasons why someone sells an asset, but only one why they buy them, which is they expect, obviously, to grow, for it to grow in value. For me, an interesting predictor, or maybe an interesting fact, is that Tim Cook, who I consider to be a very conservative manager, actually owns Bitcoin, and I've actually watched an interview when he wasn't really opposed to it in terms of Apple dabbling with it or somehow including it into its operation. I think what's happened with blockchain is that we've passed the point of no return, which means that I think there is so much so much energy put into the system that it's going to be difficult to envision a scenario where there is a world without blockchain. Now, how is this going to affect the price of particular assets? I don't know. We might see, Bitcoin falling to, $5 or whatever. I'm not, making any predictions. But I think when it comes to technology, I think we're already in the future, and the markets may or may not be pricing this, but I think definitely blockchain is a reality, and a lot of companies are creating phenomenal services and products with this. A lot of teams are joining up, and it's basically a revolution going in front of our eyes. I'm excited to see what next comes in this space. And of course, like you guys mentioned, there's the NFT craze, and there was the ICO craze, and there's going to probably be more crazes when the metaverse comes, if it comes, whatever. I think it's natural to see these kind of bubbles. That means that the system is healthy, that stuff is being sprung. We're seeing good sort of good movement there. Yeah, that's I'm a long-term bull. I intend to hold to my crypto assets, and if it's going to sink, I'm going down with a boat.
What I was going to say as well is I think that 2022 for crypto, I think it's going to be a year of maturity. And what I mean by that is I think there's already a lot of institutional interest in 2021, but I think that's going to increase in 2022. I think that's because it takes a lot of time for these institutions to get things over the line. And in 2021, there was a lot of these concerns around ESG, and I think a lot of these institutions, they have ESG committees in which they say, well, what can they actually invest in? And I think more and more has been done on the environmentally friendly Bitcoin mining throughout the world. So I think that's going to be positive for Bitcoin. I think the institutions are going to start off with Bitcoin and Ethereum, I think. And it's been good that we've got some ETFs approved for Bitcoin and Ethereum this year. Some in the US. I think one of the key things will be getting a Bitcoin spot ETF approved, in my opinion, because as we saw with the gold market, I think it was back in the 70s or 80s when the spot ETFs were approved for gold. It's had a massive effect on the price, because you had a lot of people, institutional investors, wanting to get exposure to the core asset. And I think in futures, there's a lot of manipulation that goes on in terms of of futures. So I think a spot ETF will be really, really good for the market. But just to sum it up, I think in 2022, I think it will be a year where I don't think it'll be like beginning of 2021, where you can basically invest in any crypto and it's going to be successful and you're going to make a lot of money. I think 2022, I think it's going to be a lot more selective, and I think the cream will rise to the top on certain projects, and then other projects will fade away into oblivion. So I think it'll be a survival of the fittest year, but I still expect it to do well as an asset class over the year. And I think the major market cap will increase. Amar, do you have any views on crypto?
I'll just start by stating the obvious. I think crypto is here to stay, definitely.
Yeah.
I don't think it's going to disappear. What I'll say is that I think what I feel is that a lot of cryptos are actually just masquerading as crypto. They're actually just businesses that tokenize their shares and they pretend to be crypto. They're not really very decentralized. The only decentralized cryptos I see are Bitcoin and Ethereum, maybe Cardano and Solana to a certain extent. But again, I feel that a lot of cryptos are just masquerading. They're not really decentralized. the other risk I see actually is the XRP lawsuit.
Yeah.
If that goes in favor of the SEC and they do succeed in showing that, you know, it's an illegal security, that might see a further downtrend in crypto. I think recently we saw in Kazakhstan with, you know, the disruptions there, that led to a downtrend in some cryptos. So maybe if there's you know, a crisis in Iran or another country where crypto mining is quite prevalent, maybe we'll see a further downtrend.
Yeah, I have a bit of a different view on that actually, because I agree. Apparently, so you know all the stuff that happened in Kazakhstan last week, and obviously the internet was taken down in the whole country, which affected Bitcoin mining, because I think 18% of Bitcoin miners are now set up in Kazakhstan. So because a lot of those Bitcoin miners, when China shut things down, they moved over to Kazakhstan because good weather conditions, cheap electricity. But I'm of the opinion that it's, yeah, there are risks, short-term risks on these countries with regulations, but I personally think it shows that Bitcoin is anti-fragile, that you can move out. I mean, I think in June, Bitcoin hash rate hit a big low, right? And there was a difficulty adjustment because all the Bitcoin miners in China had to relocate and they were offline for a while. And I think that's bit happened as well in terms of Kazakhstan recently, but I think it was within 3 months after they had to move out of China, Bitcoin hash rate hit an all-time high. I think just 3 or 4 months later. So I don't know, I feel like it does show its resilience as well, and that people will just relocate if the conditions aren't, you know, if the political conditions aren't favorable. So I think it shows its resilience.
That's a really great point. I like that. You know, if you know, when a system comes under pressure and it sort of comes out at the other end and it continues, then it means that it has already built in another layer of resilience. So there's probably, you know, more stability now than it was before in terms of, you know, how these miners are able to execute these kind of transitions and from one country to another, because it doesn't seem like a trivial operation. And if they were able to pull it off in a reasonably short time, it means that the next time it happens, it's probably going to happen faster. So I think anti-fragility is a very important component of Bitcoin mining. I
think so. And I think the longer an asset survives, the more chance it has of being successful, especially in a network situation where something's growing exponentially. And in order for something to become stronger, you have to throw a lot of things at it, right? To make sure it's got to stand up to the test. And if it can stand up to these tests, then it could be pretty good for the long-term future. But yeah,
like coronavirus.
Yes, we all survived, and we're a bit. I'm not sure if maybe we're stronger. Maybe we're stronger. I personally think this year will actually be quite a good year for exchange coins as well. I'm not sure what your view is on that, Zach, but I think exchange coins, I think, are going to do pretty well. I'm looking at Binance Coin. I think will do particularly well this year. I think the exchanges are good because in terms of for example, BNB, you get reduced fees on when you're buying crypto using the BNB token. Obviously, you have that BNB ecosystem, the Binance Smart Chain as well, which is going to provide a lot of utility. So I think exchange coins could be a positive area for growth in 2022 as well. And we have Ethereum 2.0, which has been promised for the last how many years, Zach? 4 or 5 years?
Too many, man. Too long. Come on.
Apparently, it finally is going to happen in 2022. We'll watch that space. But I do think that's going to be a really interesting battle, actually, because Ethereum has the first mover advantage, right? Because they have the most developers and they've been going for the longest time. But there are a lot of networks that are, you know, catching up to them in terms of speed of onboarding new developers and projects moving over. So yeah, I think there's going to be a lot of interesting layer one competition in 2022. Do you agree, Zach?
Too hard, man. I'm not sure. I would say BNB coin is interesting because Binance brings more new users to the platform than any other crypto. So Binance is definitely it's going to do well. The ecosystem is doing well.
Yeah.
You can stake like BUSD for 7% interest or something like that. So why would you hold US dollars?
Yeah.
Things like that. So it's interesting. It's getting there. It's faster than Ethereum. It's cheaper than Ethereum. But then there's Avalanche. There's Polygon. There's
Solana.
I don't know if layer one is a competition, and I'm not sure at the end of the day.
No,
too difficult. Exchanges I think is interesting. I like FTT a lot, but we don't have exposure on eToro, so that one's a problem.
But what's your view, Zach? Do you think it's going to be long-term future? I'm not talking about 2022 because it's a long-term view. But do you think it's going to be a multi-chain level layer one world that we're going to live in, or you think it's going to be just maybe a couple of the largest smart chains will survive, the rest will fade away into an oblivion? What do you think?
I think like any tech startup, you're right. There's probably going to be a winner takes all, and then a few others, but everything else is already kind of fallen off the cliff. Like I'm long Algorand. I think Algorand is a bit late to the party, but they're interesting. So it'll be interesting to see. I mentioned Polkadot many times on this, but I'll just bring this up one last time. I like Polkadot because it is no longer a competition of layer one. Polkadot is a layer 0 technology. It combines the different blockchains. So that's an easier play for me. If you ask me which is the best layer one right now, it's definitely Ethereum. Is it going to hold its dominance? Too hard. Really too hard, but I can tell you layer 0 will be very interesting for the ecosystem.
Because I think people forget it's a scale, right? People think you can be fast and decentralized, but where in terms of blockchain, it's a scale, right? So sometimes you have to give up some decentralization for speed, etc. So it's about finding that balance, and I guess it's going to be depending on what you want to use it for. That's why I think it might be a multi-chain layer one world, because depending on what you actually want to use it for, you might use a different chain, which
exactly
you might not care about decentralization of certain things you're doing, but other things, massive large outlays of money or transfers, you probably are happy to have more decentralization.
Exactly.
Okay, excellent. That's the crypto subject. And just to wrap things up, I thought it'd be quite a fun segment of this forum to go around and just each person just talk about your bold predictions for 2022. Obviously, none of us know what's going to happen in the future, but this is just a fun segment which we want to see what people's bold predictions are. So I will start off with Amar. What is your bold prediction for 2022?
Okay, so the first thing that came to mind was that Elon Musk might leave Tesla, but I don't think that's bold. I don't think that's bold enough. He has said he'll leave in probably 5 years' time. So the one I think that's a bolder prediction is I think that Bitcoin might move to a different consensus mechanism beyond proof of work, maybe to proof of stake or something like that. Generally, that's the biggest problem I have with Bitcoin, the amount of energy it uses. I know most of it could go to renewable sources, but again, it feels like a waste that you're using so much energy for just doing nothing on the Bitcoin network, frankly. Yeah. So maybe that will happen.
I don't think it would go. I don't think it would happen without a massive fight. I think that, there potentially could be people will want to fork the network, but I think a lot of the veteran Bitcoin people will not want to change to proof of stake. Gasper, what is your bold prediction for 2022?
That's a tough one. I'll give two predictions. One is a funny one, and that's Peloton is going to announce they're working on an electric car. That's a joke, obviously.
An electric car with an iPad attached to it.
Oh, that's a good idea.
So you can cycle.
With
a personal driving trainer. Yeah.
Exactly. So you can exercise while you're commuting to work or whatever. While you're commuting to the gym. But I guess the more serious prediction is, I think we're going to see another bull run in the second half of the year. I think once and if the market actually processes all what's going to happen with the rate hikes. I think currently in the wake of the anxiety that's been induced with the volatile markets and the pandemic situation, you know, I think people are sort of quite anxious, and they are sort of pricing in a worst case scenario. But I think things are going to be better than we're expecting, and I think this is gonna put in some sort of more energy into the beaten down stocks, and we're going to see some of the tech that has fallen off the grace at least regain some of the territory. So I don't know if that's bold, but that's what I'm expecting.
Okay, thanks, Gasper. It's really good. Maverick, give us something bold and beautiful for 2022.
I'm not sure about bold and beautiful, but I will be surprised if the crypto price won't go all-time high this year. Yeah.
You mean the market cap in general for all cryptos, or are you talking about Bitcoin in specifically?
I think general.
In general.
Yeah,
but... Okay. Yeah. Thanks, Maverick. That's good. And Zach.
I think this might overlap with you, Stephen. I think, okay, this is my bold prediction. By the end of this year, we'll seriously be talking about nuclear energy.
Yeah.
Stephen, in a position for this.
I tend to agree. It's not my bold prediction, but I would tend to agree, especially what's happening in Kazakhstan, because so much of the uranium mining is done in Kazakhstan. And I think there could be a shortage, and I think there's a big chance that people are going to have to buy up uranium. So yeah, I tend to agree with that one.
My prediction is that Europe will start like saying, let's go for nuclear power.
And my bold prediction, I have two, but I'll keep it quick. I think 3 countries in 2022 will adopt Bitcoin as legal tender.
Wow. Okay.
So in addition to El Salvador, so I think specifically, I think Tonga will have Bitcoin as legal tender. Panama also, as well as Paraguay, and they've already it's not really a huge bold prediction because they've already started making steps towards that in terms of regulations, but they've also been watching very closely about what El Salvador has done. So I expect at least 3 countries in 2022 to make that legal tender. And my other one is a bit more bold, and we did allude to it at the beginning of the conversation, but I think that overall, I think that the China stocks will outperform the US counterparts in 2022. But I'm going to go a step further and make it even more bold. And I'm going to say that the US stocks are going to outperform China for the first half of the year, and that China is going to outperform the US stocks the second half of the year, but finish above the US indices by the end of the year.
Wow, Stephen was coming in with that.
And I could precise.
And I could be wrong, but yeah, I prefer, if we're going to be bold, we might as well be bold.
Excellent.
Excellent. Well, I think we'll wrap up there, but I want to thank all of the panelists and thank you very much for joining today. It's been a really great discussion. We got to talk about lots of interesting subjects, but also learn some things as well from people's expertise. So thanks very much for joining, and thanks to the listener. And we'll be back next quarter with another quarterly investor forum. Thank you very much, everybody.
Thanks, everyone.
Thank you. Thanks, everyone. It was great.